Good evening, everyone. We just had a mishap on our call earlier. I'm still sitting in the same spot. I'm using the same machine, and we are going to focus tonight on the models, digital business models and finance. Let's just do some housekeeping. We'll take it from there. So we are all clear. So glad I caught a glimpse of all of you today. I saw some names that I recognized from my previous classes. I am not sure if you were able to understand when my introductions, but just a brief introduction. My name is Yolanda. I work for MTN, currently the general manager in an API marketplace. Completely new, something that hasn't been done in Africa yet, but quite exciting times. So in this module, I think all of us let's attend the lectures every Wednesday, 6 p.m. and let's go through the material and activities on ARC. I've already uploaded these slides before this session. I will always try and upload the slides before sessions as much as I can or immediately after. And my also ask is that let's read the prescribed material. And for me, everyone will tell you, let's just engage, let's have a conversation. It's not meant to be me feeding you. It's meant to be us learning from our different industries and experience. So on the focus of this module, we're going to explore all these business models, how they're designed. We're going to explore the strategies behind. We're going to understand what is digital business model, what makes it new. I mean, we've had businesses existing before, enterprises. What makes the fact that this is a digital enterprise new? So that's going to be the focus. So we're going to evaluate varying digital business models and also understand the digital design of all these models in companies. And we're going to analyze various sources of funding. And then we're going to also calculate product costs just to understand financial decisions that are required in developing these products. I think we all have done that in some sort of formal way where we know how can we develop business cases, feature cases if you're a product manager in the digital space. And we're also going to look at investments that is required for the appropriate business decisions. And we're going to also perform analytical procedures and budgets in that as well. So today is our learning unit 1, and the outcomes are all we want to do is have some basics in terms of foundational introduction. We're going to define what a business model is. We're going to differentiate between what a business model is and what business plans are. And we're going to evaluate different business models and when they are best applied. And we're going to differentiate between revenue models, enterprise models, and enterprise models. That's parts. It's called parts of models. And we're going to analyze those as well. So theme 1, digital business models, we're defining it. Let's look at this. So a business model, in simple terms, it's just how a firm creates, delivers, and captures value. What does this mean? This is just a business model. It's not digital, just any other business model. We need to understand how your business creates, how it will deliver the value to the customers, and also how it captures the value and also the market of the customers, right? So through a business model, we are able to understand how the company generates revenue and how the costs are structured. So where most of the costs are. For example, in a telco space, we all know that most of the costs are in networks. So that's where most of the costs are. I mean, there's a myriad of them, but the heavy costs are in networks because that's what they need to run the data business. And also the interactions, how the business interacts with the customer. Is it a brick and mortar where everyone walks in, or is it an online business, or is it an intermediate business? So what is that interaction with the customers and what does it look like, right? So a business model should be able to explain how internal and external resources come together, right? So a business models, you look at the offering. What are you selling? Who is your customer and what infrastructure is required to deliver your services, and also to understand what finances are involved in this. That's just basics, right? When I say basics, I mean we all understand. It's just explaining the current world that we live in our businesses as things stand. So when we're looking to define a business model, one thing should be clear. We should have a value proposition. What problem are we solving? You cannot have a value proposition that just defines what something is and what it does. The question becomes your value proposition, what problem does it solve? Right? Let's look at the delivery scooters, Mr. D, Checker 6060, and not look at the actual business model. Let's just look at what those scooters do for you. So what does that business line do for us all? Is it delivering food? Is it delivering our services? Is it delivering alcohol for us? What is it? What do they do? What problem are they solving? It's convenience, right? They are delivering convenience. They are giving us customers, their value proposition is at the core convenience. That's what they're giving us. And we also need to know which market segment we will be playing in. That needs to be very clear. Who are we going to target as our customers, and what our competitive advantage will be? Because everyone keeps doing the same thing, but what makes you unique? Why would people choose your business as opposed to the other business in doing what is currently being done? And also, how are we going to generate a revenue, which is currently linked to the problem that you are solving? And I've already mentioned on competitive strategy. I'm not going to go through this video because it won't make sense for me to go through it here, but it's in your slides. Go through it. This video makes it clear on all the business models that are out there and how they link to online. So it's not just generic business models, it's business models for digital. So anything that is online and all the former, the way that business was previously done. So please go through the video. So sometimes it's not a business model creation, but it's rather a new service that will show itself as a new model. It's a new service, something something offered a bit differently than it was previously, or that has never been offered before, right? Let's look at examples like eBay with online auction, Ryanair, the airline, right? That allows for the air travel with no frill service and emphasis on economy. So that's a saving. Their business model is a simplified business model, cost saving, right? That's their leadership. If you were to think about their competitive strategy, Netflix, we all understand this one. It's convenience and leisure, right? And we look at Amazon, we understand all these things. Behind all these companies, the most important thing to come out with and to note is what business model are they applying in achieving a business outcome. Boom. So let's look at this. What is the difference? One of the learning outcomes, two learning outcomes. Let me recap. So what is a business model? Business model solves as a combination of activities that allow us to deliver value for our customers. We look at cost, we look at infrastructure, we look at the customer, we look at the value proposition, we look at a competitive advantage. That's how we know this is the business and this is the model they are using to deliver the service. And it could be based on a myriad of strategies, as we've already discussed. Now, let's look into how do we differentiate between a business plan and a business model. We might think it's simple, but a business plan just tells us what it is that you're going to do. What are you going to do? Where are you going to play? And which market are you going to capture? It just tells us about how your business is set up to run and the focus, and also how you're going to derive revenue and calculate your revenues. So when are you going to be EBITDA positive? If it's a new business, or your free cash flow, it looks at all those aspects in the market that you're going to operate in. That's a business plan. And it's always a conversation of, can this business survive? Right? And everyone looks at the most possible models, scenarios, and cases, and they decide if it will survive or not, right? And if we look on the business model tells how the firm creates and captures value, right? And it's more focused not on operational work, but on conceptual frameworks. And it focuses on value creation. That's actually one of the key ones. Value creation. Are we able to create value? And obviously, there should be a way that the revenue will be realized in all of this. Because sometimes, if you notice, you will find people saying that, like in banking, there was a trade marketplace. So they would say, oh, trade marketplace, all the suppliers will meet there and all the suppliers will find each other and they will start to transact and to do business, which sounds great. But On whose platform? What does the bank benefit when all the suppliers on their platform are meeting and creating and driving business outcomes? The bank is not succeeding. It's just creating a community of people who are meeting and who know each other, who are exchanging services. So what does that mean? It means that the banks have not cracked yet how to create value from marketplaces and communities. Because the marketplace is just not for being there and maybe have a subscription fee and like low revenues. It should also be driving revenues. Everyone in the marketplace, if I were to drill down on that one, should be realizing some sort of revenue. Everyone should be their network effects. Everyone should see value, right? So if we are still differentiating between business plans and business models, models explains the logic, how this business generates and makes money and creates value for the customers, and business plan tells us how we can execute against that. Right? A company, we've seen this, a company may have a strong business model, but due to poor execution of the business plan or not poorly investigated, it crumbles. So let's look at one company, Takealot. Their business model is an online marketplace platform, and it's commission-based revenue. Everyone can put their services, and what they've done. So what does Takealot provide? What is that? Remember I said about marketplace. People want to think marketplace are places to be happy in. Let's bring the community together, as opposed to what problem are you solving and what value are you adding? Because if you're not making money, you're not going to be able to scale the infrastructure wide enough to be able to manage and to realize revenues from it. So it's a bit of a waste for everyone, right? So if you look at the Takealot example, when you look at a business plan, we need to understand how they are going to do logistics, how they are going to do warehousing. And they decide, is it going to be a centralized model of warehouses where we have one warehouse in Cape Town where we all fetch things from there, or each big city will have their own? That's their execution of the rollout plan. And they also decide on how much marketing they're going to put out there. They do cash flow projections that we've discussed, like EBITDA positive, when are we going to be breaking even, and also how much revenue we're going to be making over this point in time. Yes, I think that explains it quite well. Sorry, I felt like I lost something. Cool. So if we look at the 16 business model archetypes, there are a few models like creator models. So when you look at the creator models, it's serial entrepreneurship. People create businesses and generate wealth by repeatedly funding new ventures without necessarily staying long term. So they are not in the business themselves. They help people who have the right business ideas to execute. They know how long to stay and how long to keep the value and when to sell. All they're about, what value are they providing? About it. If a person is a funder, a venture funder, serial entrepreneur, what value are they funding? It's access, right? Access to revenues for people to realize their own dreams and for them to get their own share. And they want to get out while it's still hot before everything falls apart, right? And sometimes there's manufacturing. We all know about manufacturing, like in the car parts business, creating and assembling of physical products to add value. That's manufacturing. And then there's inventors, people who design and create intellectual products that are sold or licensed, right? Like Trevor Bayliss, Clockwork Radio, ARM chip design. Those are invented and they are licensed book of works. So there is also another aspect that's called the human creator. I just pulled that one out. It's illegal, right? We can see that where the business model is based on creating human assets, like designer babies, classified as obviously illegal, right? And there are other companies that are now focused on distributor models, like distribution, financial trading, which means you distribute financial capital, and look at investment banking, underwriting, in insurance, and mergers and acquisitions advisory. That's a business model. That's financial trading. What are they trading? Their knowledge of how to run financial businesses. Wholesale retailer, we know that buy, resell. IP trader, we know that about trading of intellectual property. We've seen that in research. People who sell research, that's their intellectual property. People who come up with ideas, buy, sell books. That's what they believe is their intellectual property. So there's landlord models. We've seen that. Financial landlord provide temporary use of money, banks and insurance. We've seen that. Physical landlord, we all understand that wherever you rent a car, house, that's physical. Intellectual landlord, you provide temporary use of property, like publishing, universities, where they do the publishing of papers, dissertations, and brand management. That's the intellectual landlord. Contractor, it provides a temporary use of human expertise or services. We have seen that. So there's another level D, which is the broker models. So they will facilitate transactions between parties. There's a financial broker, there's a physical broker. A financial broker falls into financial services. And there's a physical broker, which will facilitate exchange of physical goods like eBay and estate agents. We've seen that. There's an IP broker. So anything involving intellectual property, they are the ones who are responsible for being the mediator. So what are these things that we're mentioning are broker models, which we would look at as distribution. AHR brokers, we know these agents who form companies to look to help do jobs, for people to find jobs, right? So this framework groups models into 4 strategic roles, right? The creator, which makes the asset, distributor, which moves the asset, landlord, which provides the temporary access to the asset, and we have a broker that connects buyers and sellers. That's just it. So when you are looking at different business models and when best to apply what, let's think about it this way. What is happening? Is your company creating something? That means they're making an asset. Are you going to focus on distribution, meaning everyone else creates and your job is just to distribute? Then you are the one who moves an asset. It could be a physical asset, it could be an intellectual asset, just like Netflix, where everyone does the movies and we get to watch. They're focused on distribution. Okay, they also do make their own movies as well and services. And then broker is the one who connects buyers and sellers. We have all seen that, especially in the financial services space and in the estate agents. So that's the most important part, is which role are we playing? So why is this important? You need to understand this so that you understand the business that you're operating in. The whole point of knowing these things is to understand your businesses and to see how your current business can pivot. So, oh yeah, we're a business that creates. Is there an opportunity for this business to also distribute? Oh no, we're a business that's just landlording, physical and IP. Is there anything that we can do to also be a broker? So there are all these, you look at all these models and you define the space that your business plays in, and then you think, okay, fine, can we do more? Or are we going to specialize in this one and just go deeper in it, right? Cool. I'm going to move a bit fast so that this recording is not so long. We've already looked at models and archetypes. One is evaluation of the key archetypes. One is bait and hook model. When we know that this happens when the product is sold cheaply and then sold at high margin, right? For example, things like razors, like Gillette razors and print cartridges, right? We've seen this in the contracting space, like even M10, Vodacom, they will lock you in. You go in there, it looks like you're just paying 200 and something for a device that's worth 13,000. And by the time you know it, you've got 3 years with them that you have to pop out this money. So what did they do? They bait and hooked you because everyone needs a device. Remember, telcos are not selling the device, they're selling the data, but they need to give you the device because we are looking for device, right? So they are marrying those two so that you can use their data. The licensing model, the company develops an IP and other company commercializes it, which is obviously technology software and pharmaceutical patents. And like if in South Africa, CSIR, in fact, any other software companies, let me think about the Sage. So they develop the accounting software and everyone starts using it, right? And the beauty of it is that it's lower capital requirements. You don't have to build from scratch. That's why you would use a licensed model, and it's faster scaling. All you need to do is to say if you were getting it for 15 users, when you add more, you just keep going back and say I'm adding more and I'm adding more. It makes your life easy. You don't have to build for more. You just rent for more, right? And the risk is not yours because you've got liabilities with the business that is currently helping you. The platform model, I want to drill more into this. I think that's where the most value is currently. In a marketplace, it's a connection of two sides, buyers and sellers in a platform. We see this in the Takealot example, but don't think about it only in the goods being sold. Think about it in so many things. For example, think about it in a marketplace where you are able to do the same with software. So everyone gets access to software in this place to achieve what they need to achieve. The other one is obviously Uber, SA and the Bolts. The central piece is the Uber app. And there are cars and people, drivers and people who actually want to consume the service, right? And you have to have network effects. What does network effects mean? It means for this thing to work, there must be sellers and there must be buyers and there must be a marketplace. And that loop must never stop working. Subscription model. We have all seen that we are all subscribing to some sort of a media software services like Spotify and DSTV. What works for your business is that it's predictable recurring revenue because it's a subscription model. But the challenges with subscription model is they usually are low. So you are realizing based on how much scale you build, like the economies of scale need to be on your side because the revenue is low. You cannot subscribe something on a monthly basis for more than 2,000 Rand. The only thing I've seen go to that amount is 1,800 for Claude AI that just got released. So subscription services are usually lower in fees, meaning you must get more people using your service. And if you look at industry models, we said we're going to look at revenue models, enterprise models, and industry models. So in this case, industry models are concerned with position in value chain and industry structure. So that's manufacturing, distribution, and platform intermediary. You understand this one. So what does that mean? MTN operates as a telecom network operator. We know that. Yoco operates as fintech intermediary. They are in between, right? And if you look at revenue model, how money comes in, right? And enterprise, the differentiation is how money comes in and also how the firm organizes itself to exploit the market. We will touch on this a little bit again next week because I'd rather it was a conversation a little bit. We're almost there. So let's analyze the parts of a business model, right? We need to understand what is being offered. What are you selling, right? And I don't even like the way that they're talking about this. What do they mean? What are you selling? Everyone is always selling something. The question we should be asking is, what problem am I solving with my service? So what problem am I solving? I wouldn't say the offering here. I would be saying, what problem are you solving? Because doesn't matter what you sell. I can sell all my wigs. I can sell my shoes. I can sell my clothes. What problem am I solving? And who am I solving it for? Right? So the example is quite simple. Capitec offers access. I wouldn't even say it offers simplified banking service. It offers access, right? People who could previously not be banked can now bank with Capitec. Why is that? Because they've made it accessible. What did they use? They used technology to their advantage, right? And what else did they use? Because technology is a first of investment capital, initial investment. You can scale and you can lower the fees, and the saving is for the customer, right? And so then when you look at the customer side, you look at who's the target market and how are we reaching our customers and how do we deliver this value that we are creating in our offering. So that means we need to look at our customer segments, the channels, how we're going to go to market, and the relationships and ecosystems. These days, to be quite honest, there's no business in the east, but it's not great. The greatest businesses that we see are ecosystem businesses. Look at this. The simple things is Mr. D didn't say we'll hire our own people who drive our own scooters. We will build our own app. They are building the app, they own it, but it's services that come from multiple places. They're using maps from Google. They're using what do they use from I'm forgetting this name. Twilio. Sleeps. Is it Sleeps from Twilio, right? So they are using all these services from everyone in this app. They're not building anything from scratch. It's because their focus is how they go to market, not necessarily ownership, assets. So finances, we look at revenue streams and cost structure and margins and cash flow. So our model, the one that we use is here, emphasizes the most important thing that you must remember in your business model is how you're going to achieve recurring revenues. Don't want once-off revenues where this month you're up and next week you're completely down. And how scalable is your model? Can it live like it is, or can it scale across multiple markets, geographic markets, different products as well, and also switching costs for people to come and work and do this in your business? What will it take? And also, how are you going to protect your IP? So let's look at in detail part of the a business model. So the value proposition is a description of the customer problem. Yes, I've been saying this. Products or services that address it 100%. That's what your value proposition is what customer problem are you solving? And so then what are you using to solve that problem? That's it. It's that simple. What problem are you solving? How are you solving it? That's your value proposition. Nothing else. Textbooks must not say anymore. That's sufficient, right? And the market segment, we've already spoken around that. Which customer are you going to target? Are you going to target mass market? And you know, the way that the customers have been segmented in our businesses in South Africa, it's not quite right. We've got mass market, we've got niche, we've got this. That maybe works in other markets, but in our markets, the simple thing is township economy, middle class, and very wealthy, which is very, very tiny and minute in South Africa. That's how I would segment my business because I know exactly who I'm going after, right? Cool. Revenue generation and margins, I've already explained this a little bit on the previous example. This is just a little bit of detail. Competitive strategy. So those are the parts of a business model, right? We are still analyzing a business model and we need to know what makes your business unique. Why should anyone come and buy from you and not from your competitor? What makes them attracted to your business, right? So how do you develop that? Sometimes it's cost leadership. What is cost leadership? Cost leadership doesn't mean cheap. Cost leadership means that your business you've been able to achieve a cost saving in the way that you deliver your business. Let me use in distribution. So in distribution, let me think of an example that we did when we were doing the masters. I think there was something about Pick n Pay. You can correct me if I'm wrong. I'm happy with that. There was that they used distributors they use farmers that are close to each of their stores that they can use. So you won't get someone coming from Cape Town delivering something in the Eastern Cape. If they can prevent it, they will use local farmers. What that does is that it saves the cost from transportation, and that saving, they don't keep it in the bank, they pass it on to the customer, so they're able to sell the service, the goods cheaper, and the more customers come and buy from them, so they are relying on economies of scale by lowering their cost of service, right? That's called cost leadership. When you do whatever it takes and you find something that works, that saves money, that works out cheaper, and you pass it to your customers, the saving. Differentiation, when you can differentiate your service completely differently. Mine was in insurance. I won't mention the two companies. I submitted claim on two insurances, one for a phone, one for something that broke in my house. It's different insurances. What the other one did for me was, the first time I spoke to them, I said, I'm submitting a claim. They said, oh, ma'am, is everything okay? I said, no, something in my house like this is broke, my keys or whatever. And they said, oh, no, sorry to hear that. Give us this. What happened? Oh, we'll make sure someone is there to allocate. They made it as though they were helping me. Even when they sent someone to come and have a look and assessor, the assessor was not going to check how this thing must not be paid. The assessor was going to check how it must be paid. So they used claims experience as a differentiator. So that's what I would say that. And then the other insurer guys, they said to me, ma'am, this guy said to me, ma'am, I want to make sure that you understand that, the claim, you give me everything so the claim is not invalid. I said, the claim cannot be invalid, sir. I have paid every month my insurance, and right now I am claiming. So the claim can definitely not be invalid. And I'm claiming for the same asset that I've insured. So can you see how the other company uses claims experience as a differentiator? There we go. Niche strategy, something that is few people can achieve it. And sometimes niche, they go for very few people who can access it, but the cost is high. But the people who are going for it are willing to pay that cost. Yeah, so your business model must align with your strategy. Boom. I would like to stop here because theme 2, it's just 6 slides, and I want to go with it through it a little bit next week. I don't want to completely just do everything on a video. It doesn't seem nice. And also, let's just look at the business model framework. What does this framework consist of, right? It consists of the offering. We've spoken about this. What exactly problem are you solving? So what are you offering to solve that problem? Customer side, right? and infrastructure and finances. So those are four major aspects that Alex Osterwalder is identifying. So let's look at what we are looking at here. This is a business model framework. If you're doing a business model, you need to know what it is that you're offering. And your offering is defined by your value proposition. And if you remember, we said that your value proposition is the problem that you are solving and what you are solving that problem, what you are doing to solve that problem. So if you're solving access, so what are you doing? I'm doing easy banking. That's an example. So that's your value proposition, right? And then it will be part of your strategy. The strategy then looks at whether you are going for what we've just a niche. So it's a niche strategy. Is it a differentiation strategy? Is it a cost leadership strategy? Good. And so on the customer side, if you look at it, how you manage what is the customer relationship, and also what would you use to distribute to these channels, and which segment of clients are you of customers are you going for, right? And this all lives in the ecosystem of infrastructure and success, and obviously generating more revenues. I thank you so much. I will upload this on the YouTube channel and put it as a link on ARC tonight. Thank you, Tim. Appreciate it.